Hey, what's going on YouTube? Welcome back to Calvin Lim Investing. As usual, I'm your host Calvin, and today we're going to be talking about some of the largest holdings I have in my dividend-oriented portfolio. So I have an account that's based off of, or that's centered around long-term dividend investing, and what I do is I try to pick stocks that I think are a little bit on the discounted side and that do pay a significant dividend. And I try to go for more of the large cap companies with a long history of paying a consistent dividend. So before we dive deep into this discussion, if you could just scroll down, hit the subscribe button. I definitely really love and appreciate all the support I can get. Second of all, I'm not a financial advisor or an expert, so please contact one if you do plan on investing. All right, with that being said, let's jump right in. So one of the first companies that I bought in this dividend-oriented account, which is going to be Exxon Mobil, XOM. Exxon Mobil pays a dividend of about $3.48. Almost $3.50, so $3.48 per year. As you can see, the company has been paying a solid dividend that has increased in the last, almost the last decade. It has steadily increased. Pays about 87. It pays 87 cents per quarter per share, and that's about 5.86% based off of the current price of ExxonMobil. ExxonMobil is trading, let's take a look. It's trading around 56.5. And in the last year, the company actually took a huge dip at the beginning. Let's see. Beginning of COVID, almost a year ago, it was trading around 32. It rose up and it also fell back down to that same range. So ExxonMobil is one of my largest holdings in this dividend account. I did pick up most of my shares during both the first dip and sort of in between the second dip. So I hold over 100 shares of ExxonMobil in this account. My average is going to be about $34 or $35, which is a pretty good return. It's almost it's over a 50% return based off of its current price. So ExxonMobil is going to be my first one. The next company that I picked up and I have a large holding is going to be Wells Fargo. So Wells Fargo is trading around $39.63. In the last year, it actually hit a low of 20. You can see it's $20.76. It has been below 25 a considerable amount of time. This is one of the ones where I might have gotten in a little early, but I have a cost average of $31 per share for Wells Fargo, and I'm holding almost 200 shares of this company. And unlike the other companies we're going to look at, Wells Fargo actually had to cut their dividend due to some financial regulations. The company was trading above $50 before COVID. I think there's still a lot of room to grow. I'm only up about $8 to $9 per share at this moment, but I do own almost 200 shares, and ExxonMobil is one of my largest holdings in my portfolio. I think the company before COVID paid one of the higher dividends in the financial sector. Let's go look at their history real quick. So prior to COVID, Wells Fargo was paying about almost a little bit more than $2 per year, with this 0.4, so we multiply it by 5 to be about $2. It was paying about 5%, maybe a little bit more per year, and that was definitely on the higher side. So I did decide to invest heavily into Wells Fargo. I thought I bought the dip. I started buying sub 30. It dipped a little bit more, and I've been loading up ever since. I think Wells Fargo should be trading a little bit above that $45-$50 range. The other company that I have a large holdings in, this is not necessarily a super world beater, but it's going to be SPG, Simon Property Group. So Simon Property Group, they manage a lot of these malls, these large centers. You might see them in various outlets, and some of these large scale malls around the U.S. Their market cap is around $38 billion, and in the last year they've actually taken a roller coaster of a ride. The last 5 years they were trading above $150 for the most part until COVID. You see this drop. It was around 123 in February, and it dipped to below 60. So Simon Property Group is another one of my favorites in this account. I'm holding a smaller position, but my average is going to be $75 per share. And Simon Property Group pays a very solid dividend. They're currently paying about 4.4%. 4.4%. It's about $5 per share per year. And as you can see, at one point, they were paying about over $8 annually in dividends. So they did cut their dividend due to COVID, but expect this to sort of slowly come back after COVID. I am a little skeptical in holding SPG for a prolonged period of time because I do think there's going to be a transition away from malls. But at the moment, I still really like the company, and I'm still holding a small amount of shares. I got about 25 shares of SPG at the moment. I'm not sure if I plan on loading up or what I plan on doing in the near future. The next company that I have a large holdings that is going to be a dividend stock is going to be PSEC, Prospect Capital Corporation. The company, let's see if I can find it. The company does sort of a lot of manages a lot of capital, emerging growth, buyouts, refinancing, a lot of things in the capital sector. It provides a lot of asset management, and the company actually in the last year was trading below, for the most of the year was trading below $5. I got in around this area, and I've been loading up on a monthly basis. PSEC, unlike these other companies, pays a dividend monthly. So you see that it pays about 72 cents per year, and you get a 6 cents payout per month. So it actually speeds up the rate at which you're able to create that dividend snowball effect. So what happens is I own about 535 shares of PSEC. My cost average is $5.71, so I'm up about $2 per share on over 500 shares, and they pay a really, really nice dividend. So it's almost 10%, right? And when I bought it, it has been paying that 6 cents dividend even throughout COVID. So when I first bought it, the dividend was over 10%, and that was definitely something I really liked. So PSEC is another one that has a large chunk in my account. And finally, I think my last company that I bought that could be a dividend company again, or could be furthering through tech, is going to be Disney. So I have a solid position in Disney. The company is worth almost $350 billion. I think Disney is on sort of that borderline fringe dividend company and tech, right? With the emergence of Disney Plus, I think they have a really, really bright future. At the same time, the company did pay a dividend for the better part of this last 20, 30, 40 years. I'm not sure if the dividend will ever come back. If it doesn't, I don't mind. If the dividend does come back, I'll take that as well. But as you can see, let's see if we can find Disney. As you can see, Disney did pay a solid dividend prior to COVID. It was paying about, let's see, about, we'll say, they paid it, it's about $1, almost $1.80 per year. They paid it semi-annually, so they paid dividends twice a year, and it was, almost at that point. Let's see, Disney was trading probably around right here, under probably right here was around the range. So it was about $130. It was over 1% dividend. Nothing spectacular, but if the dividend does come back, I'll be happy. Otherwise, I'm gonna be okay with Disney reinvesting that money into improving their content, improving their brand. I think Disney has a really great opportunity to go toe to toe with Netflix and all these other streaming companies. I think at the end of the day, Disney will probably end up as the most valuable streaming company because not only does it have its own original content, it doesn't need to license as much to drive content. The one downside I'll say is that unlike a lot of these other platforms, a lot of the stuff you find on Disney is Disney branded. They don't really go out and acquire a lot of these older films that can be added to the platform, whereas Netflix has added, such movies such as The Dark Knight, Alexander, just a bunch of films that I kind of watched growing up. So these are just some of the 5 companies that I have really big holdings in my long-term account. I definitely plan on continuing to slowly add funds into this dividend focused account and have it create that snowballing dividend effect and really see this account grow. So before we jump off for today, I will want to note that a lot of these companies that I added into this account I did buy in the original March dip. I am an avid credit card turner. I do like to earn a bunch of reward points, and at the onset of COVID, I decided that rather than holding all these points, I would cash some of these out and buy the dip. So I was able to buy the dip in a lot of these quote unquote Warren Buffett type stocks. I bought the dip in Apple, Wells Fargo, Bank of America, Disney, Simon Property Group, Coca-Cola. These are a lot of more stable companies that have an ingrained role in the U.S. economy. So those are just some of the ones that I'm looking at or that I have at the moment. So thank you guys so much for tuning in today, and I really appreciate all the support I can get. So make sure to scroll down and smash that subscribe button. Thank you so much. Have a good one.